It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Hey, it's Tyrone Jackson, the wealthy investor. I'm back with another hot episode of Trading Stocks Made Easy. I'm a little excited in here today. Do you know why I'm a little excited? First of all, you are back to spend some time with me. So right then and there, mwah! I love you for that. Second of all, today's show is all about stock splits. Now, let me stop here for a moment. There are a lot of people who are so-called gurus of the stock market, but they don't teach you anywhere near as much information as I share with you during the Trading Stocks Made Easy podcast, right? And the whole idea of this show is that I take a complex topic like the stock market and I make it easy. Trading Stocks Made Easy. Get it? So whenever I explain a concept to you, like today we're going to talk about board of directors and stock splits, I'm going to take out all the fancy mumbo jumbo that you don't need to know so that you can understand why stock splits happen and why they make millionaires millionaires and billionaires billionaires. You ready? Okay, so here on this show, we talk about a lot of different topics, and one of them is how to trade stocks that are in the public domain. Publicly traded stocks. Okay, now every exchange around the world where stocks are traded have their own rules, but there are certain rules and most importantly, certain strategies that have proven themselves over time. So if you don't have a lot of money, pay attention. If you have a lot of money, pay attention and listen to me because I make millionaires. Here we go. When a stock is publicly traded, if the company is generating more and more revenue, more top-line revenue, the shares over time will rise. Now, when we're interested in shares rising over time, we're probably investors. Traders are looking to make monthly residual income off of the stock as it's rising. But in this particular episode, I want you to focus on investing because this is powerful. When stock prices rise, at some point, they become too expensive for what the industry refers to as retail investors, people like you and I. In other words, if I gave you a set of stocks right now to either trade or invest, and 5 of those stocks are $700 a share, and 2 of them are $30 a share, being new to the market, which one are you going to choose? You're going to choose the cheaper stock price, right? That is the kiss of death, not the smartest thing to do, but that's what people do. And hey, let's be honest, you got to get started somewhere. Well, stocks that are cheaper, and when I say cheaper in this episode, I'm referring to stocks that are under $100. The reason they're under $100 is because there's less demand. In other words, not that many people want to own those shares. That's why they're cheap. You'll find the stocks that have the greatest demand are usually over $100 a share. Now, why is that? Well, as it turns out, it's not just you and I investing in the stock market. It's institutions, it's banks, it's college endowments, right? It's insurance companies from all over the world, all investing in stocks in the U.S. stock market. And what are they buying? They're buying names like Apple, Microsoft, Visa, Costco, companies that have done very, very well and whose stock prices have a tendency to rise over time because of the rising revenue and the companies are very well run. Well, every once in a while, we get stocks that rise above $500 a share, and the governing body at a major corporation, which sets policies, called the board of directors. So I want you to think about 2 separate entities at every publicly traded company. The first is the board of directors, who makes general policy about how the company should be run. The other person I want you to think about here is the CEO, the Chief Executive Officer, the top dog, the numero uno, the big cheese, however it is you want to refer to them. The board of directors hires a CEO that they can work with. They shape the policy. He or she then plays it out every single day. Well, they're not supposed to look at their stock price on Wall Street, but many of the board members, as well as the CEO, get compensated by what? By the amount of shares that they have in the open market. In fact, the CEO may make $2 million a year, but he or she can be awarded $30 million worth of stock when they sign on, plus a bonus. Now, the CEO is really being compensated based on how well the company does and the perception by the public. And if the stock price is driven up higher, most of the CEO's net worth will also go higher. In other words, if I hire you and give you a $5 million bonus and $30 million worth of stock, your goal is to perform well, drive up sales, so that your $30 million worth of stock becomes what? Worth $300 million. You get rewarded if the company performs well. Well, when CEOs do a great job, sometimes the stock prices rise above $500 to $700, $800, even $1,000 per share. What does that do to the average retail investor? It scares them away from the stock. The stock is simply too expensive for them. So every once in a while, the board of directors, along with the CEO, will convene and decide to split the shares in that publicly traded company. Now, let's pause for a moment. See, you're getting the education that you should have gotten really in high school so that you would be richer by now. But it's okay. You find the right information when it's your time to learn it. The universe always provides at the right place at the right time. Now, let's go back to the CEO and the board of directors. The board of directors can authorize something called a stock split, where in effect they cut the share price in half. So if these shares are trading at $1,000 a pop like we saw with Shopify, they know, being the board of directors, that the public is not going to create a demand for the stock. Share price is too high. But who drives up the stock price once the shares go above $100? It's institutions, right? So Harvard, Yale, they all have college endowments. Where is that money ultimately headed back to? To the stock market, so that the college or university has a form of appreciating assets and maybe even residual income. See, this is why the richer get richer in the United States. Because if you're not in on the game of wealth building through stocks, life is hard. You live paycheck to paycheck. You're on the wheel, and it's just no fun. But when your consciousness is awakened and you're getting a financial education, it just makes sense to learn how the stock market functions and works. All right, so let's talk about this authorization of a stock split. The stock split for the existing shareholders really doesn't create more wealth. It just gives you more shares. The most common stock split is 2-for-1. That means the shares that are at $1,000 are going to split down to 2 shares of $500. Now, for the existing shareholders, they don't have more money. They just have more shares, right? That's important. The other denomination of stock split is a 3-for-2, when the shares split in thirds. Every once in a while, we get something called a 10-for-1 stock split, because the board of directors really wants to try to make their shares, as I like to say, the prettiest girl in the room. Well, if the shares are at $1,000 and they split 10-for-1, on the split date, the shares will go back down to $100, which does what? Creates more demand for the stock, because now the average retail investor can participate in share ownership. Now, what's really interesting, if you study the history of stock splits, particularly on Dow stocks and S&P stocks, the shares tend to go right back up to their pre-split levels within 5 to 10 years. Why? If the company is really well run, there's demand for the shares. So is there a way for you and I to make money off of stock splits, whether it's 2-for-1, 3-for-2, or 10-for-1? The answer, of course, is yes. I'm going to tell you how to make money from stock splits right after you listen to this.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
Welcome back to Trading Stocks Made Easy. I'm your lovable host, Tyrone Jackson. But you know that. All right, let's get back to this stock split stuff. All right, here's what happens. We talked about 2 for 1, 3 for 2, and 10 for 1. Well, every once in a while, we get an extraordinary event that happens in the stock market, and we are just days away from a 20 for 1 stock split on one of your favorite companies. Now, what happens when Amazon.com splits its shares 20 for 1? If the shares close on the Friday prior to the split at about $2,500, which is where they've been bouncing around, the average share price of Amazon stock will go down to about $150. Now, I say about because we never know what the exact numbers are going to be until the day of the split, and then the day the market opens and the shares are split adjusted. So, did you know that Amazon.com stock has been up 1,000% over the last 10 years? This is why a few people in America became millionaires because they held the shares for 10 years. This is also why even a smaller handful of people became billionaires. You see, it's not just about knowing the name of the company and buying things from them online. Wealth building is all about being a shareholder. So if you've ever purchased anything from Amazon.com, and you've never purchased any shares, it doesn't make sense, right? You're constantly buying from a company, but yet you don't participate in the wealth building through share ownership. That's sad. That's tragic. I want you to put a stop to it. So now that you know that a 20 for 1 stock split is coming and 10 for 1 is highly unusual, how many more times is Amazon going to split its stock 20 for 1? Probably never. This is a once-in-a-lifetime opportunity, and that's the way that I see it. Now, you see, I'm not a financial advisor, so I don't make money off of you by charging you fees at all. I'm here to educate you and show you what is going on in the market, so if you decide on your own to take advantage of that, then you build wealth on your own and you keep all of the money. What I do is I teach people how the market actually works, how to develop a millionaire mindset, and how to change their lives. You apply these principles, your life is going to change. Now, recently we had a very significant pullback in the stock market, so your favorite stocks of all kinds have become cheaper. But we're going to see a swell of stock splits in the next year. Are you in on these stock splits? Well, you should be. Here's why. Wall Street is also a very competitive environment. So when a big company like Amazon splits its shares, they know they're going to be the most attractive stock in the U.S. stock market, and a lot of money is going to flow into owning Amazon shares. This, in effect, puts pressure on other big names to split their shares. What did I tell you in the first half of the show? Well, 9 times out of 10, when a company splits its shares, what happens to the share price? It creates demand, and guess what? Within 5 to 10 years, those prices of those shares go right back up to where they were before the split happens. Now, I've been telling a lot of people about this Amazon stock split because it is a grand opportunity, not only in what we call your cash account in the Wealthy Investor Program, also in your retirement. So instead of letting other people choose stocks or mutuals funds for you, what if you made a common practice to pick up shares of prominent companies when they split? Now, we have a tendency of thinking of really rich people as being public. In other words, when somebody makes a fortune, they're on television and they're in commercials and movies, and that's just not true. Some of the richest people in the world never reveal their names. Why? Well, quite frankly, it brings too much heat and attention from people who want to borrow money, hit them up with lawsuits, etc., etc., etc. So most of the world's wealthy are anonymous. They're anonymous. So there have been several books written about this, like The Millionaire Next Door, how average people become millionaires. I am here to encourage you to become not just a millionaire. Who wants to be a millionaire these days with all this innovation and technology? I'd rather you become a multimillionaire. Yes, you become a multimillionaire. Now let's think about it from the point of view of someone who is a wealth coach and stock market teacher. If I can help you become richer, well, that adds to my success. That's my mission, to ring that bell and let as many people know the opportunities that exist in the stock market right now. So that means don't wait to get a financial education. You want to learn the next 7 companies that are planning to split or their shares are at pre-split levels. Yes or yes? Do you get a sense of how powerful stock splits are, not only for you, but they're also for the board of directors and, most importantly, the CEO. Now, many employees at these companies are also awarded something called stock options, which means they have the right to buy shares that are already on the open market at an insider price. So when a stock split happens, who gets richer? Board of directors, CEO, employees of the company, and who else? You. How do you get richer? You listen to me. You follow me. We have so many downloads in a week, the numbers have just blown up. I've been on YouTube and Facebook talking about stock splits and a lot of other strategies for almost a decade now. The amount of people who I've helped become successful stock market traders, I don't even know the numbers anymore. I'm really proud of it. And why is it I don't know the numbers? Because most of the people who I've helped make rich are anonymous. I don't know them. They don't reach out to me, right? But I can tell you this, because of the amount of emails that we receive, they're all over the world. And how is wealth built faster and easier? Through understanding stock splits and how to utilize them inside your TD Ameritrade account. So what are you going to do? You have some choices. You have some things to learn. Even if you don't want to spend any money, sashay on over to thewealthyinvestor.net. At least download my free ebook on how to trade stocks. Why? Your wealth is in your thinking, your ability to assess the financial market, and the financial education that you will really need in the next 2 to 3 years. Now, I'm always about the positive message, but I'm going to tell you exactly what's going to happen. We're in the middle right now of the Federal Reserve raising interest rates to slow down inflation. Well, if the Federal Reserve is raising interest rates, the interest rate set by the Fed affects everything: your car loans, your credit cards, and your adjustable rate mortgage. What's going to happen if the Fed continues to raise interest rates? Most people won't be able to afford their dream house because the interest on the mortgage, not the house, the interest on the mortgage on a monthly basis is simply going to be too high. Well, when this happens and interest rates rise in the U.S. economy, historically home ownership goes down and rentals go higher. Why? Because your landlord can raise the rent on you because rents in the marketplace are rising. How do you stop that trend from happening negatively in your life? And how do you start to begin wealth? You get in on stock splits. Do you get it? So if you're seeking the right opportunity and you're seeking wealth, now is the time to learn more about stock splits with me as your teacher and as your guide, now more than ever. Even if you take no action, just because you've listened to the episode to the end, you should give yourself some credit and a big round of applause. I thank you for spending this time with me. You know how much I love our time together. I can't wait to meet you in person someday, but make sure you learn right now, before this avalanche starts, what companies are about to split their shares and how it's a tremendous wealth builder for you. Thank you for being here. This is Tyrone Jackson, the Wealthy Investor, saying I'll see you on the next episode of Trading Stocks Made Easy.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.